There are three main exchanges in the United Arab Emirates: the Dubai Financial Market, the Abu Dhabi Securities Exchange, and the Nasdaq Dubai. The Dubai Financial Market, DFM, was established in 2000, and there are 178 listings on the exchange, denominated in United Arab Emirates dirhams. The majority of them are UAE-based businesses, with a few dual listings for businesses headquartered in other MENA nations. Kuwait, Bahrain, Oman and Sudan are among the foreign countries represented. Many businesses enable foreigners to invest in their stock. There are 73 listings on the Abu Dhabi Securities Exchange, also denominated in UAE dirhams. On the other hand, Nasdaq Dubai serves as a facilitator for locals to access international markets that cover regional and worldwide Middle East stocks. Local issuers can access regional and worldwide investment through the exchange. The United Arab Emirates and the remainder of the Gulf Cooperation Council, GCC, the wider Middle East and North Africa, Turkey and the Indian subcontinent are all part of the Nasdaq Dubai exchange listings. DFM, which bought 2/3 of Nasdaq Dubai's shares from Bourse Dubai and Nasdaq OMX Group, is the company's dominant stakeholder. 1/3 of the shares are still owned by Bourse Dubai. The Securities and Commodities Authority, SCA, oversees and regulates both DFM and ADX. Nasdaq Dubai, on the other hand, is controlled by an independent regulator known as the Dubai Financial Services Authority, which is similar to the Securities and Exchange Commission in the United States. Nasdaq Dubai, unlike DFM and ADX, is an electronic exchange with no trading floor. It is located in the Dubai International Financial Centre, DIFC. With a gross domestic product of $421 billion in 2020, the United Arab Emirates, or UAE, is the fourth biggest economy in the Middle East after Turkey, Saudi Arabia and Iran. The UAE has been successful in diversifying its economy, notably in Dubai, but it remains largely reliant on petroleum and natural gas earnings, which continue to play a major role in its economy, particularly in Abu Dhabi. In 2009, oil exports accounted for more than 85% of the UAE's economy, while Abu Dhabi and the other UAE Emirates have taken a cautious approach to diversification. Dubai, which has considerably fewer oil reserves, has taken a more aggressive strategy. Oil exports account for 77% of the UAE's national budget in 2011. Tourism is one of the UAE's largest non-oil revenue streams, with some of the world's most expensive hotels situated there. The UAE's economy is diversifying thanks to a major building boom, a growing manufacturing base and a booming services sector. There are at present $350 billion in ongoing building projects around the country. Dubai's diversification in the 1980s was focused on trade and the development of shipping and logistics hubs, particularly Port Rashid and the port and free zone of Jebel Ali, as well as Dubai International Airport, resulting in a number of major global shipping, transportation and logistics companies, DP World, Emirates, DNATA. The worldwide financial crisis of 2007-8, when Dubai was bailed out by Abu Dhabi, temporarily slowed the growth of Dubai's thriving real estate market. The recovery from the overheated market resulted in stricter regulation and monitoring, as well as a more realistic real estate market in the UAE, with many stalled projects resuming. With a gross domestic product of $414 billion in 2018, the UAE had the second largest economy in the Arab world, behind Saudi Arabia. Oil earnings account for a third of the country's GDP. The United Arab Emirates GDP has risen by over 231 times since 1971. From 1981 to 2012, the non-oil trade increased by about 28 times to AED 1.2 trillion. The UAE's economy is one of the most open in the world, and its economic history dates back to the days when ships travelled from India to Mozambique along the Swahili coast. In its World Economic Outlook report, the IMF attributed the UAE's potentially high economic development to the growing contribution of non-petroleum industries, which grew at a rate of more than 6% on average. Banking, tourism, trade and real estate are examples of such contributions. The growth in Emirati buying power has resulted in a significant increase in government spending on infrastructure projects. According to A.T. Kearney, the UAE is in the top 20 nations for a global service business, among the top 30 on the WEF's most networked countries, and in the top quarter of the TI's corruption index. In an effort to deal with and recover from the economic shocks caused by the months-long coronavirus lockdown, the government of the United Arab Emirates announced a wide reorganisation and merging of more than half of its federal institutions, including ministries and departments. There is no capital gains tax in the UAE, but you may be liable in your home country. Equity research on the UAE market can be done with the Dubai Federal Competitiveness and Statistics Centre website. First, with more than 100 regions covered, you can learn more with the Exotic Markets book available on Amazon. Second, you can explore sector and industry intelligence for different countries by going to pervasives.com. If you have an issue in relation to accounting and tax with foreign stocks, you can contact us by going to our website.